Holy smokas, this ain't no jokas, folks. HYLD cut the dividend by 14%, something I mentioned 4 months ago. Now, I did already have my whole victory lap and everything, so this isn't about that. This is about the changes, opinion, and all that fun stuff about HYLD from an unbiased, unsponsored YouTuber. So welcome, everybody. If you're here, you know that I have not been a huge fan of this fund for quite some time. I bought it, the tax information, I bought it, I said, maybe I'm wrong. Maybe I am wrong. I made a whole video about that, and then the tax information came out. I said, I'm done, I'm not touching this thing again, and a dividend cut happened. So, let's go into it. In delivering you more US income every month. That is actually now incorrect, by the way. So a 13.99% monthly distribution, that is incorrect. As of right now, it is 11.7%. Portfolio of U.S. equity covered call ETFs, again, incorrect. It is not. With overall sector mix broadly similar to the S&P 500. More blue caps, but sure, whatever. Here's the actual part we're going to be talking about, though. HYLD adding QQCC, USCC, and reducing QYLD, RYLD, and XYLD. Funny enough, they're not reducing JEPI or JEPQ. Change in distribution. AKA, because they're too cowardly to admit it, a dividend cut. So, let's go down to this is to provide attractive monthly income. To accomplish this, we aim to create higher yield, blah, 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 blah. Last summer, we made changes to the holdings of HDIV and HYLD to support the yield distribution increase, correlation to each country's benchmark, and lower combined fee. In this insight, we discussed the most recent changes to the portfolio. We discussed the decision to adjust the distribution. Again, just say you cut the dividend. I know they're trying not to. The recent declines in JEPI and JEPIQ's distribution, as well as the cumulative decline in distribution for Global X ETFs since HYLD launched. They say they're adding this. They break it all down here if you guys really want to come look at it. Main reason, it's this magical thing called total return right here, directly above me. Now, total return, as you guys can see, QYLD and XYLD suck. Now, the total return is the share price plus distribution, and this is like your total return if you own it. 3.3%, 6.3%, and it breaks it down right here. As of March 30th of 2023, QYLD, XYLD are net of U.S. withholding taxes, and mandate changes June 24th of 2022. Now, total return is what everyone should go off of. I do not care about yield. I do not care about the price. It is the total return. So that breaks down this. Yields quite a bit higher, decent amount. Number of holdings. USCC has a little bit less, but really not a big deal at all. So, seems like a really decent change. Bringing it down here, you have this. Since last fall, we made several changes to it, and it is with the addition of JEPI, JEPIQ, blah, blah, blah. Then it goes down that, hey, this is what happened, and this is our yield rule of thumb. So this is really good. They're opening up about it. At launch, the weighted average yield of the underlying ETFs times 1.25% was higher than the yield in rows above the plus negative 1% optimal range. The distributions continued to gradually decline. In addition, the most recent distribution reductions from JEPI, JEPIQ caused this to fall to negative 2%, and hence we are reducing the distribution to bring it back to 1%. So they do a really good thing breaking it down here. So this is their rule of thumb. This is basically their entire holding. So as you can see, they bought it and immediately everything shot down. And then they've had negative returns or negative return off the yield since June of 2020 all the way to March. Like, come on, guys. That's pretty bad. You can't tell me that's good. That's pretty bad, because clearly something wasn't working, and yet they stayed with it, and it only got worse and worse and worse. Breaks down here. Here's each HDIVs. As you can see, it's all completely positive, which, if this is correct, I believe they have to pay a special dividend. But surprise, surprise, we didn't get one, so I don't really believe it. But they did increase the distribution, so ultimately, whatever, it's fine. They can continue to do so. And what's funny is that if you look at it, they increased it because it went above the 2% line, and it's still staying above 2%. So if you're really a gambling man, you could bet on another div hike, but I wouldn't bet on it. Then it goes, oh, they work well together, but we're using 50% SMP and 50% the TSX, which I just don't know why you don't just use one or the other. It's very simple. And they really love touting that they've matched it, and congrats, you've matched it for what? Little bit less than, no, a little bit more than a year. I'm not impressed. It needs to be longer than just a year. I could show anyone a stock within a year and be like, guys, look, it matched the S&P. No, it needs to be over the long term. That doesn't matter. Then they go, this is JEPIQ, so JEPI distribution, you guys can see right there. Now, this is where I now have an issue with Hamilton, because they should have expected this. JEPI, JEPIQ, QYLD, XYLD, RYLD, and all of these distributions are variable dividends. They go off the premium. So the premium they generate from covered calls is what they pay out to investors. Now, one thing I absolutely love is everyone says, well, HYLD does covered calls. Then why are they making such a huge deal with the distribution? No, they don't. I don't care what you say. This proves my point that the yield of the investment holdings matter. I do not care that if they use covered calls. They clearly don't. So my prediction of the 140% payout ratio on Reddit that I made, that I got banned and kicked out of Adrian Group's Passive Investing, I was right. I do not want to hear any more about it, because this proves my point, or they wouldn't be caring this much about the distributions. So to break it down, HYLD invests. So it was 60 cents. Now it's over to about 40. JEPIQ, yeah, it's like 55-ish. And then dropped down to 40. QYLD, yeah, it was like 20-ish when they invested, and then it dropped down to about 15. Which is, like, that is not much of a decline. Let's be very honest with each other. XYLD, they invested, it was around 50-ish, and it dipped all the way down to 40. RYLD, they invested, it was paying around, let's say, $22.50, and right now it's paying around 17 to 19. Now, what irritates me is, again, they're variable dividend. The manager should have expected, like, okay, we need to leave X amount of room. Worst case scenario, HYLD pays a special distribution to make up for all the, like, to be within taxes and all that stuff. Or to be within, I believe it's like regulation or something like that. But they can very easily have done that. Instead, they started off way higher than it should have been. And then when that wasn't sustainable, they Hail Married into JEPI, JEPIQ, and these US funds. Or sorry, they replaced the Canadian funds with JEPIQ and JEPI. And then that didn't work because they invested it and it immediately fell to what they should have seen as, like, oh, is it probably going to be the average distribution we get? So they've been losing money for a decent amount of time for HYLD. They've lost money since June to March. And HDiv is doing perfectly fine. Just looking at this, they're based on their yield rule of thumb. So then you go down, and it's basically just the manager was stupid and didn't plan for any of these, even though he knows these are variable distribution. It is random every single month, and you cannot rely on it to be this high for a significant amount of time. Like, it's a no-brainer. And it's like a word on trading liquidity for ETS, and it basically just goes over everything, and then they break all this down. Now, the other thing we need to look at is what they bought, which is QQCC and USCC. QQCC, we can literally look at it, and you're going to see something kinda not really surprising, especially if you get it from the tone of my voice. Yeah, these are variable distribution ones as well. So this is the NASDAQ 100. This is literally a glorified QYLD. The performance has actually been okay. if I remember correctly. So I'm just waiting for this thing to load. Go to max. Oh, never mind. Look at that, guys. It's way down. $20. You're down 50%. I take that back. But the yield is also very variable too. So see, it's been consistent since December. But look before. It's all over the place. And I'm assuming this is because of the massive spike up in volatility, which is why funds such as PAYF is able to hike the distribution. But this is not going to last. So here's my question if you still want to invest in HYLD. Why do you want to risk investing in it for this when any day they could cut it back to half of what it is now? Why would you want that? Because you're putting it at risk. If it ever dips down to this, you're going to get burnt. And you can tell it's so random. It was 20 cents at one point. 20 cents, 20, 8, 8, 8, 7, 8, 7, 7, 8, 11, 9. It's like, it's so random since 2012. It's been so random that you cannot rely on this. So this is what they replaced it with. I'm not impressed. The other one is US large cap, which this apparently is the S&P replacement and the RYLD replacement. So let's do what we did before, if this thing actually wants to load. Look at that. Performed pretty damn well. I'm pretty happy with that. So it IPO'd, let's say, around $12. So you're up like 50%, which is not bad. Distributions on top of that, like, you're probably up quite a lot. And these distributions have almost consistently been over 10 since 2021. But below that, look at all of these less than 10. But since then, it's gone relatively up with the market, which is pretty good. So this one I'm not worried about, but again, there has been a few cases where it's been way lower than it is now. So again, I ask you, if you're gonna buy this, what do you think is gonna happen? What do you think is going to happen once they reduce the dividend? Because the volatility right now is because of interest rates, inflation, people looking really hard for yield and everything. But the moment all of this, and also zero date to expiration options, which Wall Street Bets is just stupid for doing that. But what happens when the volatility dies off? That's my biggest concern with HYLD, because they are heavily reliant, and this is obvious to me right here, distributions of this. They're reliant on very high volume to justify all these funds paying them much more in distribution. So that is my biggest issue with HYLD as of right now. My issue changed from it. I was upset about the payout ratio, and now I'm like, oh, well, it's probably fine, but the moment these cut the dividend or reduce it, your boy's back in the red. And no, they're investing when it's paying like a decent amount too. And again, like USCC, I'm not worried about. Like, if you look at the distributions for the last like July to now, they've all been pretty damn high. But again, the moment the distributions just run off, volatility falls, less premiums, less all this stuff, less and less people are going to buy it. And this one specifically, QQCC, has me very concerned, because you can look and it's 6, 6, 5, 6, 5, 6, 9, 10, 10, 11, 11, 10, 10, 10, 10. Like, what happens when the volatility dies off and it goes right back down? And like, let's say hypothetically, it goes right back down to 5 cents. What is HYLD going to do? Because they're going to have to cut the dividend again. So I still have issues with Hamilton. I'm still a little bit concerned about it. I feel much better about it because they cut it, which I was hoping they would. Well, not hoping. No one hopes for that, but was expecting them to do for a few months now, and I'm happy they finally did it. again, I did my victory thing and all that, but I'm happy they did it because now the dividend is at least more stable. But the moment this volatility dies off, everybody, I'm telling you right now, it's probably going to get cut again. And also, with all the people hyping this crap up, Adrian, Bradley, and all these other people, do not listen to them. Adrian is sponsored, he is paid to shill this fund. Everyone else, their reputation's on the line. They're very desperate to save face and to say, oh, the fund's okay. Nothing's going to happen again. Remember when the tax information came out and Adrian said to everybody, do not panic? And then immediately, like a few months later, div cut. And his statement came out very quick. So I am almost convinced they told him, this is going to happen. Get some type of release ready for this. And Robert in this, again, no, Robert's the manager, I'm assuming, which is Adrian's best friend that works for Hamilton, came onto my Reddit and said everything I put is wrong, and then surprise, surprise, div cut. You cannot trust YouTubers that are paid and sponsored by a company when they talk about said company. Hold that to me. If I ever get sponsored by a company or anything, or if I ever am like, man, I love this, I had like a huge talk with these guys, unless it is talk about information, do not believe me. Do not believe me. Unless I'm like, yeah, I called in, they said they're planning a distribution hike within the next 5 years. That's fine. If I'm like, yeah, I called, the guy was like super nice and stuff, and he like, we talked for like an hour. Don't believe me. Do not believe me, because I am too attached. So remember that when his Q&A video comes out, Rob has lied publicly. Adrian has very idiotically made a dumb decision saying, oh, it's fine, and then div cut, because no offense, he doesn't know what he's talking about. All this stuff, keep in mind for the QA video. Go enjoy it. I'm not going to watch it because I hate both of them, and I think they're both kind of stupid. But, everyone do yourself. This is your HYLD update. I'm more impressed now, but I'm still concerned that if anything happens to those distributions, like, you guys are getting reamed so hard by Hamilton. You're going to easily get another div cut. So if you were to buy Hamilton, if I had a gun to my head and they were like, pick a price, I honestly would probably have to pick like maybe $12 because I'm expecting eventually this, like, I'm talking years out, by the way. Like, if the volatility does die down and the distributions die down again, chances there'll be a div cut to 10 cents. Very high chance. If the volume dies and the distributions die off again more aggressively than what Hamilton expects. That's pretty much it. Enjoy the rest of your day, and let me know what you think about this, because the distribution cut came as no surprise, but the change in holdings, I am very surprised. I did not expect them to change it yet again, and I have yet to go in and to see their new holdings and see if they lost any money selling or buying these brand new ones, but time will tell. And with that, everybody, have a good one. Bye.